The trading day is set for a strong positive start, with the Gift Nifty signaling a gap up of approximately 140 points. This momentum is supported by a combination of cooling global oil prices, rising U.S. futures, and a favorable update to the U.S. trade tariff structure for India. Overnight, the global macro environment has shifted from a headwind to a tailwind, creating a clear path for a robust opening in domestic markets. Geopolitical tensions are showing signs of a temporary reprieve. After 13 days of escalation, the U.S.-Iran conflict has entered a 2-day military pause. While the situation remains fragile and the U.S. continues redirecting commercial vessels for verification, the immediate diplomatic pressure has eased. This line chart shows how quickly the military pause impacted energy markets. Crude oil prices have dropped significantly, with Brent falling to $87 and WTI to $84.5 per barrel. Trade policy is also providing a boost. The expiration of the temporary U.S. global tariff means India now moves into the standard 10% bracket. Crucially, this chart shows that 45% of Indian exports, specifically pharmaceuticals and smartphones, are entirely exempt from that tax. This exemption protects the margins for two of India's largest export sectors. The combination of lower imported inflation from oil and these protected export margins provides the domestic market with a structural advantage heading into today's session. Domestic liquidity remains a primary pillar of support. This chart compares institutional cash flows, showing that 5,433 crores in DII purchases more than offset the 3,892 crores in foreign institutional selling. That underlying domestic strength, combined with U.S. futures trading up between 0.5% and 1.1%, reinforces the bullish setup for the 140-point gap up. This options heat map defines the technical boundaries. Support is layered at 23,800 and 23,700, with a significant floor at 23,500. On the upside, heavy call open interest identifies clear resistance, anticipating stiff selling pressure at 24,000 and 24,200. Regarding volatility, the India VIX rose over 4% in the previous session. However, today's positive opening is likely to trigger a volatility crush, leading the VIX to melt lower as the market stabilizes at higher levels. While domestic cash flows provide a strong foundation, the focus for the day remains on whether the index can maintain its momentum between these 23,500 and 24,200 technical markers. Beyond the index, stock-specific volatility will be driven by a heavy roster of corporate earnings reports. Key companies reporting today include Coal India, BEL, Tata Power, Tata Chemicals, IndusInd Bank, Canara Bank, and Coforge. The game plan for today is to monitor the Nifty as it tests 24,000 resistance, while tracking pharma and smartphone stocks for potential rallies linked to the tariff exemptions. With geopolitical and trade headwinds currently subsiding, the market's direction now rests on its ability to sustain this gap up against its established technical resistance.